Jyoti Gupta, research analyst at Nirmal Bank Institutional Equities, to talk to us about the defense space. And specifically, let's talk about and start by talking about HAL as well, right? Obviously, HAL, such a big order win coming in. Jyoti, what are we watching out for now? This is just 62,000 crores order is what has come in just yesterday in terms of an announcement. How are you looking at HAL now going forward?
Thank you so much for having me here. And honestly speaking, this was anticipated. So
Okay,
we
I
were
think
expecting.
Jyoti, you're on mute.
No, we can hear her.
Oh,
We can
okay.
hear her.
All right, go ahead.
Good morning, and thank you so much for having me here. So you see, this order which has come was anticipated, long awaited, actually by HAL as well. So if you ask me, it's not a surprise for us all at all. It should be backed by engines. So. Uh, and it doesn't really impact. We see the margins for HAL to be intact. What we see in FY25 levels at around 30%. I think the next 2 to 3 years, the margins are not going to be impacted. Will be at the same level. So across, one need to understand that for defense, I don't see a material change except for maybe a 10 basis points in margins improvement. The only factor that needs to be seen is the revenue pickup, which means execution. There shouldn't be any delays in execution and step up in execution the next 2 to 3 years. So
Question only, Jyoti, because that concern on execution is where it comes in, right? So is that a point of worry maybe that we could see coming in for HAL then?
See, for HAL, this year we expect something like 12 engines to come. I think we should have 10 engines by February of this financial year. We already have received 3 engines, and I think maybe by mid-September we should have another 2. So where the MD should actually the numbers in HAL should give you a surprise by almost like double-digit growth. He's anticipating 8% for FY26, but I think it should be somewhere close to 13% based on deliveries of ALH and the LCA Mark ones, which is 5 in number. I think he should exceed it by at least. He should at least deliver 7 or could actually deliver 9 LCA Mark ones this financial year. So I don't think execution now from this year onwards should be a concern. Uh, Delays for defense sector, first half is always lumpy, but third and fourth quarter would give you a surprise with revenue recognition materially improving up as most of the platforms are moved to the execution phase. So overall, structurally, we are positive on the entire defense sector and so on HAL as well.
Okay. Well, exactly what I wanted to narrow down on, Jyoti, was, the Prime Minister's call on the Independence Day speech also for defense self-reliance. So based on that, what are the key stocks that one should probably put in their portfolio? And what is the incremental order inflow opportunities you see coming into the defense space and the timeline as well?
So, if you ask me, we have a significant order book already lying, waiting to get executed. So, last year in September, you see, we had something like 1.45 lakh crores of order, which is yet for DSC approval. We recently had 1.05 lakh crores now, which where the beneficiaries have already been announced. 67,000 crores, additional 64,000 crores have come for HAL, and we will continue to have. And then you have additional 34,000 crores of emergency procurement order. And there is huge order inflows from exports. Anyways, you look at Cochin Shipyard and JRSC, which are already having collaborations with US Navy for sea lift, and looking at Germany for the tugs and Bullard tugs, as well as the propulsion gearboxes. So a lot of orders are already there for most of the Indian defense companies. If you ask me, the PSUs will be the major beneficiaries, and eventually the orders would percolate to the primes as well as to the legacy players, and eventually to the ancillaries. So overall, the defense sector for the next 3 years, it is going to do very well. All we have to see is that some would give you a higher return compared to the others relatively compared to the other players. And companies who have not performed in the last 5 years, could be for reasons like low order book or execution delays, would actually start giving numbers in the subsequent quarters.
I wanted to narrow down on Cochin Shipyard as well, Jyoti. You know, in their conference call, they are indicating that 14-15% growth is what they would look at in terms of sales for FY26. But if you look at it, by 2030 to 2031, they're looking to even double their revenue. So in that context, how would you approach a Cochin Shipyard? What is your target price on that? Do you think that these targets are achievable by the company?
Hey, we actually don't. It's in my soft coverage, so I don't have a target price for Cochin Shipyard. But what I see the capability that Cochin Shipyard has is, one is the aircraft carriers. It is expecting the next generation aircraft, advanced aircraft carrier order. Apart from that, if you see, they have capability of building almost like 1.1 deadweight tonnage ship, as well as repairing almost like 1.25 lakh tons deadweight tonnage of ships. So they, and from which actually and also the benefit that GRSE and Cochin Shipyard both are expected to get from the Marine Development Fund, which is roughly around 70,000 crores, which is basically on shipbuilding, and that is where these two companies benefit. And so does specifically for Cochin Shipyard. So if you look at Cochin Shipyard's yard's order, I mean, they are, as I told you, they have orders for 70 tons Bollard pull tugs from Germany. They're working on next generation missiles for Indian Navy, which is roughly around 9.8 billion order, which they should deliver by March 2027. So I think the 14-15% growth that they're looking at is achievable. In fact, they've even signed, which I just mentioned, they've even signed a collaboration with the Master Ship Repair Agreement with the US Navy for their military sea lift command vessel, which is a very good order, a decent order for Cochin Shipyard. Overall, these numbers are quite achievable if there are no execution delays.
No execution delays. That's something that we could watch out for. But Jyoti, what are you watching out for overall in the defense pack, right? Where we have Cochin Shipyard, Garden Reach Shipbuilders, the shipbuilders companies, Masgao Dockside. Is that something that is more attractive now, or would you be playing the story through HAL, BAL, BDL, which is also very expensive in terms of valuation, especially Bharat Dynamics? So where is the value now in this defense space?
I agree. But the entire rally, if you see for stocks earlier, was based on order book. Now the rally is because of execution. It's all priced in, but there we haven't priced in the. And whatever, you look at the valuations, they look steep because the kind of guidance the companies have given, which is actually conservative for both 25 and 26, in fact 27 as well. I think with the kind of orders we currently have in hand and what is going to come up in the next 2 quarters, and if you again, the whole point is on execution. If there are no delays, and the kind of growth that we are expected to see for any company, it will be easily around to a higher double-digit growth, and with margins, the valuations won't actually. Then you would see that possibly there's a huge upside to every stock going forward.
Okay, just quickly before we let you go, Jyoti, on Garden Reach Shipbuilders, specifically on the Navy P-70 Bravo project, how lucrative do you think that opportunity could be?
So the P-17 is expected, it's around a 70,000 crore order. It should be divided between MDL as well as GRSE. So it is a lucrative order, and which I believe will be executed over a period of 5 years. So yeah, they will be. It'll be a major driver for margins for GRSE, definitely, because if you look at GRSE, their capabilities, they have done warships, but their main capabilities is basically 5-ton boats and roughly around 25,000 fleet tankers. So P-17 would definitely be a decent demand revenue driver for them.
Okay, all right, Jyoti, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So defense continues to be in focus as a sector. We need to take a short break at this point in time. The mid-cap index up around 0.4%. On the other side, we have Alap Patel, who's the Executive Director of HLE Glascoat, joining in to discuss an acquisition that they've made.